back. We have with me, Brian Eustace, real estate agent with Paul Rushforth Real Estate. And we're talking about first-time home buyers and purchasing a home here in Ottawa. If you do have any questions, you can give us a call here at 613-728-1001. And so now we're going to discuss saving up for that down payment.
Sure.
I believe now the rules are you need at least a minimum of 5% is what they need to produce.
Yeah, well, typically the bank wants to see 20% down, but as far as first-time home buyers are concerned, there is a little bit of leeway for you. They allow 15%. Now, CMHC just released last week that those fees are going up as of May the 1st.
Right.
They're going to be going up approximately 15%, which will add about $900 to your initial fee. And it all depends, what the value of your home is going to be. But, $240,000 condo putting 5% down, the changes are going to be a $900 increase on $240,000. But as far as that's concerned, it's not something that we necessarily want to hear, but they often tie that into the mortgage. Okay, the insurance fee that you charge if you put less than 20% down. And that being the case, it will add about $5 a month to your payment over the term of a 25-year mortgage. So as far as that's concerned, it's not all that bad. I wouldn't get necessarily worked up with it.
Yeah.
But it's something that you have to take into account. And once again, your lender can go through everything like that for you. It sort of depends on if you're going to go variable open, variable close, 5-year fix, 10-year fix, home equity line of credit, anything like that. Everything sort of depends.
Okay. So one of the options you have to save up for your down payment is using RSPs, and that's using the home buyer's plan. And we have a graphic for that. To bring that up. And Alright, so just to show you about the home buyer's plan, so you can withdraw up to $25,000 from your home buyer's plan to use, or you can withdraw up to $25,000 from your RSP to use your home buyer's plan. So if you have a partner that's going to be purchasing us together, you can both withdraw up to $25,000 each, so a total of $50,000. And you have to withdraw that 90 days before you purchase the house. And once you do withdraw that, you have to, I got that backwards here. The contributions must be in the account for up to 90 days. So after they've been in your RSP for 90 days, then you can use them. When you do withdraw them, you have about 2 years to purchase the home. And then you have about 15 years to repay that. So an example, if you were to withdraw, say, $15,000, 2 years after you purchase the home, you have to start repaying that. So you break that down over 15 years, so that's $1,000 a year. You have to repay that back. So that's a good option to pay that down payment. You need that extra bump too, just to avoid that CMHC if that's going to affect things as well too. So
that's actually a great point. Just to touch on that a little bit. We have a number of first-time home buyers that are reluctant to do that, and I understand why. Yeah. But if you look at any 10-year average of, say, what your RSP is doing versus what real estate is doing, real estate has typically done better over a 10-year average than, say, an RSP has. So moving it from one investment to another, it's still an investment, and it's still an appreciating asset. So being that you're typically over a 10-year average, you're going to get more off your real estate. It's not bad to use that because it's still an investment. It's still your investment. It's still your money. But probably making more money over a 10-year average based on what we've seen in the past. So not a bad idea.
Yeah. Another question too I get asked quite frequently is how do I repay that home buyer's plan? Like how does that work? And how that works is when you make a deposit into your RSP, and then when you file your income tax, there's a section where you can declare your deposits for your RSP either towards a home buyer's plan or for your RSP. And then you get a statement on your income tax return showing exactly how much is owing and how much the next payment is. So it's important to watch that and make sure you make your payments, because if you don't make your payments, then they start having that claimed as income on your income tax, and you start getting penalties for that.
Right.
So it's one thing definitely to keep track of. So in terms of first-time home buyers, what should they, when you meet a real estate agent and they say they want to buy a home, what kind of things you sit down and discuss with them? What do you?
Sure. Well, for us personally, we work with a team and we discuss what we go through as a team from. Basically, we set expectations for you so you know step by step what's going to happen from beginning to the end. So essentially what we're going to do is we're going to make sure that you're represented properly. We're going to make sure that you're pre-approved properly. And then once you're pre-approved, we're going to set you up on a search. But what's also really good about a real estate agent is that you don't have to pay us. We're paid through the proceeds of the sale on the listing side, so you don't actually pay us. And we discuss that with you. But also we have a lot of pocket listings and exclusive listings that the public don't necessarily see. So if you're planning on going out and doing this on your own, you're actually in less control than you think. So we put you in a place of control that you're in absolute total control of your home buying experience. We just literally lead you, we walk right beside you and lead you into letting you know what you're doing is right, what you're doing is wrong. And then once you find something that you'd like to go and see based on a search that we set you up on, we'll go and we'll have a look at it. I'll do a market analysis for you to ensure that if you do like it, you're not overpaying for it. So we can go over the history of that. And then if you do want to move forward with it, then we can put together an offer that's weighted in your favor. Make sure that you have all the conditions that you need so you're protected, like a finance clause so your bank can review it before going firm. An inspection clause, which is very important. Do an inspection on the home. Make sure everything's in good shape. Got good bones in there. And then an insurance clause, and then you can go ahead and make sure that you're insured properly. And then, once that happens, then you're good to go and buy your home.
What should people be looking for when they're looking at home? Should they bring along a checklist? Should they plan ahead of time what it is they're looking for?
Well,
things that should be.
Yeah, you could bring a checklist. But it's funny, I just met someone the other day who had a checklist, and one of the things was that they wanted at least 2,300 square feet in their house, and that's fair. But then found out that looking through homes, that some homes that had more square footage actually showed smaller just by the way it was laid out. So sure, you want to have a checklist of things that you know, but if you're going ahead and you're buying a home and you've decided that you've gone to go get your pre-approval and you're doing your search, you pretty much know what you want in the home, and the realtor who's fairly well educated will bring it through. Show you the highlights of the home, show you possibly some lowlights of the home, and you'll be able to make a decision on that. Typically, I have found over the years that the checklist works. Bring a checklist. I'm not saying no to the checklist, but when you walk in that front door, you know. You don't want to get too caught up in your emotions, but you know that it feels like home, and that's the biggest tell. And then if you do, then we sort of reel you back in and make sure that we're doing everything properly, and we can go over a checklist, but the MLS sheets that we have, it's called MLX for us. It has everything on that, right down to the size of each room, the taxes, the lot size, all that kind of stuff. So we can go through with you, but yeah, the checklist never hurts. Yeah.
Okay. Home inspection. What when you do make that offer and get a home inspection, it's one of the clauses. What will a home inspector do for them? What for the buyer?
Well, a home inspector, it should be a certified home inspector. First of all, usually the buddy or the uncle doesn't usually work out that well. You have to keep in mind that when you get into a home, and we see a lot of TV shows that have inspectors in it, and they're opening the walls and seeing everything.
Yeah.
When you're doing the home inspection, you don't actually own the home yet. It's a conditional sale. You can't open up the walls. So there are latent defects and there are visual defects. Latent defects are typically behind the walls, things that you can't see. And that accounts for about 75% of the home, whereas 25% of the visual defects. Now, a good certified home inspector will have some tools to be able to allow you to see some of the latent defects, not all of it, but they'll be able to test out the electrical to make sure there's no hot spots, reverse polarization. They'll go through the plumbing. I mean, they'll fill up the bathtubs, make sure it drains and there's no leaks. They'll go down and have a look at the foundation, make sure everything's dry. They look at the grading of the house, make sure water runs away from the house. Now, grading's a pretty easy fix. They'll go up and they'll have a look at the roof. They'll go into the attic and make sure that the trusses are in good shape and that there's enough insulation to keep you warm, that kind of thing, because code changes. Just having, for my last job, in my last career, the code changes so often that if you're buying a home that's older than 5 years old, it's not going to meet code. Okay, so home inspection doesn't necessarily pass or fail. From the inspector's point of view, the inspector's just going to tell you the condition of the home in their opinion, and then it passes or fails on the way you feel about how it's gone. But one thing I will say is that an inspector can tear a house apart from top to bottom, regardless of how new, custom, or anything. So you have to make sure that you have an inspector that tells you what's normal and what's not normal, and what's maintenance and what's not maintenance. We want to make sure that you're protected. Show me a house, I'll show you a crack in the foundation. Settling cracks is normal, but you don't want to wait too long so water infiltrates and damages your home. That's a bad scenario. It's an easy fix, but if you don't fix it, then it can be really bad. But aside from that, the inspector will look at the flooring, will look at the joists in the basement, will look at everything. Typically not appliances, but outside of that, the windows, make sure the seals aren't broken, so they'll look at everything.
And so would that buyer use that in negotiating the price with the homeowner if there's something serious that needs to be?
If there's something serious, yeah. If it's within normal realm, then then if you wouldn't buy that house, you probably wouldn't buy any house, right? So you have to look what's normal. But if there's something, let's say you have a 3-month closing, and you're purchasing a house today. Well, 3 months we're going to go through a major melt, and if you're like me, you have a 7-foot snowbank out front. And if there's a crack in the foundation, well, you probably want to go back to the seller and have the seller have that repaired with a lifetime warranty by a professional, and you get the paperwork for it. But you can ask for the money back if you want to do it yourself. But if it's serious, we don't necessarily use an inspection for another negotiating tool. Your negotiating's been done, at that time. Then you go through, if it's normal, it's fine. But if it's not normal, absolutely. We either walk from the deal or we go back and we have it fixed, or we get compensated for it. Okay, for sure.
And what kind of after the purchase, after the close, after you moved in, what kind of, let's say warranty, but what kind of recourse would you have, say if there's something that comes up that is serious in the home?
Well, that's a great question. There's a buyer beware element here. Okay, that once you move in, we have clauses put in our agreements of purchase and sale that say once the buyer moves in, all of the mechanical, structural, electrical, everything like that is in good working order, free from well leads and encumbrances, and assumed to be in wonderful condition. Once you're in there for over 24 hours, it's essentially your home. So outside of that, if there's something really, really serious that it's clearly evident that it was there prior to you moving in, then certainly you go in and see a lawyer and see what the lawyer can do. That's when your lawyer becomes your best friend. And then that's when letters get sent out. And if you want to do legal action, that's fine. But if you move in, we have that appliances are in good working order. If you move in and all of a sudden the dishwasher doesn't work, we're certainly going to make the courtesy call to let the other side know. But I don't know if you want to pay a lawyer thousands of dollars for a $400 item.
Yeah, I guess
you are buying a used home, but at that we do have protectionary measures in there for the buyers. But once you move in, make sure you check everything the day that you move in. Do a full walkthrough, even if it means calling the inspector that you had to go in and meet you there that same day. Often they'll come back and they'll meet with you and they'll just do a quick walkthrough. But typically closings are 30, 60 days and it should be in the same condition. There are signs. Yeah. There are definite signs, mold and whatnot when you do the initial inspection as to how good, well sealed the home is.
Perfect. Great. So now it's time for another break. So we'll be back more. And again, if you have questions, give us a call at 613-728-1001.